Hello, it's Paul here from Raise Finance. I just want to introduce myself. I'm one of the mortgage brokers here. I'm also the owner of the company, and I also do risk insurance. I'm an insurance broker as well. Now, you would have received this email, would have been sent to you from one of our staff members, either Sally or Megan, because they'll be processing your application for a mortgage, for a loan, for a pre-approval through the banks. One of our responsibilities while we're doing an application for a loan approval is to ask you questions around what would happen to you if you were to have this mortgage and something were to happen to you through accident, illness, or injury, and you were not able to pay the mortgage because your income stopped for whatever reason. And so this is part of our responsibilities to ask you this question and ask you whether you would have enough money or what would your plan be if you if that scenario were to happen. Now, most people don't realise that income protection, life insurance, TPD, and trauma insurance are all available, and a lot of these can be paid through your super fund. So we're going to introduce to you the concept of making sure that we get you the loan, but we also do a pre-approval for risk insurance to see if you've got access, to see if the insurance company will accept you to protect you, to keep the banks away from taking your house should something happen and your income stop. So in this email, you're going to get some brochures. One of them is called income protection. The other one's called life insurance, total and permanent disability, and trauma insurance. And I want you to have a quick read of each one of them. So firstly, on the income protection, what is it? So income protection insurance replaces up to 75% of your monthly income if you have to stop work due to illness or injury or an accident. Life insurance, that's like death insurance. So pretty much if you have a terminal illness or you die as a result of an illness or an accident or whatever, then your debts will be paid out. A lot of people don't know about this one, total and permanent disability. So total and permanent disability insurance pays a lump sum if you become totally or permanently disabled due to illness or injury. Typically, this means that you've been unable to work again in your current occupation, so whatever your occupation is now, or any other occupation that you're qualified to do. So that's a very important one. So these three here, income protection, life insurance, and total and permanent disability, these can all be paid through your super fund, and we can organise all this for you. So we want to make sure that you've got at least some cover in place if you're going to take out a big loan. The other one we're going to introduce to you is trauma insurance. So trauma insurance provides a lump sum payment if you're diagnosed with a specific medical condition like cancer, heart attack, stroke, or require a heart bypass surgery. So basically, you suffer one of these medical conditions and then you get a huge medical bill. Trauma insurance helps pay for that medical bill. All right, so it's a lump sum payment towards it. That one can't be paid through super, but these three can: total and permanent disability, life insurance, and income protection. So you're going to receive these in the email along with this video, and you're also going to receive this one here, which is a very long-winded document. It's 106 pages. I'm not expecting you to read all of it, but this is what we call the product disclosure statement. So this is just one of the companies that we use, Clearview. We use a number of other companies as well, but this gives you a bit of an idea. If you want more information about what they are, you can trawl through this and have a good read. So so this conversation is going to come up and we are going to talk to you about it. We are going to ask you for your superannuation statements. So when we get your superannuation statements, we're going to see if there's already some form of insurance there. If there is, we're going to talk to you about what's already there. If not, we're going to strongly advise you put something in place. So we're not going ahead with something. What we want to do is we want to get a pre-approval just like the loan. So we're going to run the loan application and we want to run an application for risk insurance with an insurance company at the same time. So we're going to run the two in parallel. And then hopefully your loan will get approved and you'll also get an approval for your insurance. And once they've approved you, then we can work out how much you want to go ahead with, whether you want to go ahead with all of it, just some of it, or bits and pieces, or just reduce it or whatever. I don't recommend that you have no insurance. It's like having no insurance on a car or a house. It's very dangerous. It's not what we advise at all. So we strongly advise you to consider taking out some form of cover to make sure that the banks can't take your house should something happen. All right, so this is just an introductory video. When we get more detailed into it, when we start talking more about it, we'll provide some quotes and some what it would cost. And then we can go through the process of what the actual application process is and how long it's going to take and what are the steps involved. Any questions, just please email through to us, and we look forward to helping you out. Okay, thank you.